Okay, good evening, everyone. Good evening. I think, okay, I'm audible and we are good to begin the second session on order flow trading today. Right. Before I go on, I would urge people who have not gone through our first in the series on order flow, where we covered the basics, the phase one of what order flow trading is all about. I would urge all of you to go through that video, maybe okay later this evening, and catch up okay with what are we call the foundational aspects of understanding order flow. So just to do a quick recap of what we spoke about in the last session and just a refresher as we move onwards, we spoke about order flow as to do everything with the demand and the supply side of the market. Now, this is a fundamental change from the way people approach the markets in terms of the understanding of price and price only. So, what we are asking you to do is move a step back from price and understand what is actually moving the price. And what actually moves price is what is called demand or buy side orders, and supply, which is called sell side orders. So demand and supply are the basics of understanding markets, and traders who understand that there is more demand in the time frame of their choice, okay, get better results at trading. So that was okay one aspect we spoke about. We touched a bit upon market orders. We spoke about how market orders can influence price action, and then okay we proceeded okay to talk a little bit more about what basically an order flow trader should be looking at. Now that was in the session okay which went by. Today's session okay we are going to be touching a bit more deeper into what constitutes and what moves an order flow chart, right? So this is still on YouTube, and there's going to be a recording of this available for all of us to go through later. So I would urge you, okay, if you have got some more questions, etc., you can go through it later in the evening also, right? So let's begin, okay, with what an order flow is. So you're looking at an order flow chart right now on your screens, and this is the Nifty futures dated today. Now, order flow is putting the market under a microscope, okay, and you're seeing in that microscope what is actually okay happening at the granular level, at the micro level of the market. So you will never get okay about, let's say, about 100 bars or about 1,000 bars on one screen. Okay, you will at the most okay have about 6, 7, 10 bars to look at, and you're looking to see okay what the market is doing in that micro side of the market. So what we are doing is, in order flow, we are toggling the bar open, okay, that open, high, low, and close, and we are going inside the bar, and we're trying to find out okay what actually is happening within the bar. And why are we doing that? Because we want to understand what is moving in that bar, what is price actually doing between the high and the low, the open and the close. And if we can get a sense of what exactly has happened in that bar, it goes to show that there was something okay which we call an impulse drive within that bar which created that price move. And if we can keep a record of that, that is not just important for that bar okay which is happening, but it is going to be important in the bars to come also, in the session to come also, in the time to come also. So that's what okay we are doing in order flow. We're looking at the micro side of the market. Okay, now our focus today is going to be on understanding what are initiative orders, what are initiative buyers, and what are initiative sellers in the market. And that very word itself, initiative, it flows from an understanding of market orders. So just a quick revision again of what we spoke in the last session. We spoke okay about limit orders as being orders which are kept in the market at a certain price. Only when price or the LTP, the last traded price, comes to that level, we know okay that order is going to be triggered. So say okay your LTP is around 21,009. A limit order could be anywhere between 21,033 to 35 or 15, 21,050, or even at, if it the 1% rule okay of the exchange allows it, It could be any number above that 1% limit also, right? So any number above the LTP or below the LTP and your order quantity stated is what constitutes a limit order. Now you cannot input a limit order without specifying your quantity or without specifying your volume, right? Try to do it in your trading terminals, you'll never be able to do it, which is why we say always volume moves price. Okay, you cannot enter any order in the markets without specifying the quantity you're going to be trading that order at, that price at. Okay, so always the quantity is what matters and what is the driver of the price action. But beyond that, the limit order is just sitting over there to have price go to it so that it can get executed. But if the market was solely dependent on only limit orders to move, the market would not really have that kind of a volume, right? Just think about a particular situation where, let's say, in a room there are about 10 traders and the market is trading, let's say, at about 21,000 right now, and each of these 10 traders have got limit orders. Let's say 5 of them have got at 21,010, 21,011, 21,012, 20,015, 10 or 15 points above the price, and the remaining 5 have got orders at 20,090, 20,089, 20,087, 86, 85, right? Price is at 21,000, 21,000. What is the motivation or what is the reason price will either go to 21,010 or 20,090 without an impulse being created at exactly 21,000? Price cannot move on limit orders. So enter something called a market order. This is a trader who is in a hurry, who's saying, I want to get my fill guaranteed and I want to trade a market which wants to go up or down. So he's the kind of trader who says, I feel that the market may go down to 21,010, but I don't want to wait till 21,010. I want to enter now at 21,000. So he becomes what we call an initiative trader, in this case an initiative buyer, and he has to go market or establish a market order to move price from 21,000 onwards. So 21,000, whoever comes above as supply, he has to go and put his buy order at that price so that price can move from one level to the next level. So that's how movement is created in the markets. That's how traders can have price moving in. Now, of course, this is a big ecosystem and there is a lot more orders, and the bigger liquid markets like your indices, your options, etc., they can have there's a lot of orders which are in the exchange at all times, both limit as well as market. But what we're trying to drive at over here is that without a market order, price would not move. So it's something like you are waiting to, let's say you are in Delhi and you want to reach Mumbai for the evening. So you go to you want to really go, so you have an option to travel either by flight or by train, but you go and pick up the ticket at the best available time, at the best whatever price is available, but you're in a hurry to go, right? So that is your market order. Your limit order could be you decided in Delhi that you want to go to Mumbai on the 25th of the month. So you go and do your online reservation and you book a ticket for the 25th of the month and you travel on the 25th. That by definition becomes a limit order. But the man in a hurry, who wants to reach Mumbai urgently, will go and pick up his ticket at the railway station or at the airport and pay whatever price is needed so that he goes from destination A to destination B. So because of this, we feel that tracking market orders becomes important for us because it helps us to understand that there are certain traders who want to go from point A to point B, and maybe, just maybe, they may be having a little bit more information with them, which is why they are willing to pay any price to get over there. I'll repeat, they may be having certain information with them, which is why they are willing to pay any price to get over there faster. Now, one particular trader does not make a market. Okay, so what we do is we try to see, okay, if there is a number of traders who are sharing that same sentiment, who are sharing that same feeling, right? So we cluster, or we bring all of these group of traders together who are all by definition market orders, and we put them in a certain bar, and we try to see, okay, with that bar, okay, whether there is a large scale activity happening with one particular trigger or with one particular intent, and that is, okay, aggressively, okay, wanting to go from point A to point B. And because, okay, we can do that, and we can identify, okay, those kind of traders, we call them initiative traders. So if the market, okay, went up after they entered, obviously, okay, they put in a buy market order, which is why, okay, we call them initiative buy side traders or initiative buyers. And if the market went down after they entered, we deduce, okay, that they inputted initiative or market sell side orders, and that's why we call them initiative sellers. So this is the trigger on which the entire mechanism of the market works: initiative buyers and initiative sellers. I want you to make a small distinction over here. I know, okay, a lot of you are order flow traders, and you would be have traded, okay, with a large number of order flow providers before. Okay, the world of order flow is got a lot of techniques, a lot of systems, okay, and all of them, okay, are highly respected, and we all, okay, trade, okay, out of these out of these things, okay, which we are used to, right? And we like to see ourselves, okay, trading, okay, with this understanding, okay, that all is good. But what really happens is, beyond, okay, all that which is already happened, okay, there is a basic understanding of what actually, okay, should be there in the way, okay, we understand markets, or in the way, okay, we have a way of expecting a certain output, okay, from the market. And it needs to be measured, it needs to be understood, it needs to be measured, it needs to be calculated, right? So when it comes, okay, to defining market orders, the world of order flow thinks about these as on a concept, okay, called delta, which is a fair way of understanding market orders also. And it was one of the earliest terms which were always used to understand the world of order flow. In fact, the use of the term delta, or the indicator called delta, is from 2002, when Market Delta and Investor RT were the ones, okay, along with Trevor Harnett, etc., who started, okay, working on this concept, and they spent a lot of money trying to tell people, okay, about how delta worked. Now that is very good as an indicator even today, and for all of you who have got results with it, it is excellent. But we moved a little bit further from that definition, and instead of focusing only on that row on which that delta was created, or on that price row on which delta was created, we decided, okay, to adopt the method, okay, to one particular container, which you call a bar, which you call a container, which you call a candle, which you may call, okay, by anything else. So we wanted to see, okay, what is the movement of aggressive market players in that bar. So we said, okay, that bar, okay, could be anything, could be a 1 minute bar, a 3 minute bar, or a 5 minute bar, or a 30 minute bar. But we want to see, okay, how many market orders are there in that bar. So the distinction was, instead of going at a certain price level, say 21,000, we went in and started looking at the entire activity within an entire bar. So thus was born the concept of initiative buyers, which we call IB, and initiative sellers, which is called IS. So what you're seeing on screen right now is these are what are called initiative sellers, and they would show a lot more aggressive market orders. And because of these aggressive orders in this is a 3-minute time frame of the market, and in that 3-minute time frame, in this particular one bar of 3 minutes, we can safely say that there is a lot more sell side activity happening than buy side activity, and that too market. And because of that, we can say price, okay, moved, okay, from point A, which was around 21,030, 20,031, 32, up to about 34, right up to about 21,016. Okay, now one bar does not make a market, right? And one volume, even though it is about 1092 contracts, which is above average, the average, okay, for a 3-minute candle in a quite a period of the day is only about 350 to about 400 lots, and that is the Nifty futures, right? One bar does not make a market, right? So you have to see, okay, whether there is a cluster of these happening or whether there is a collection of this coming together, and that will tell you, okay, that the market is now being dominated by a stronger seller who is keen on going market, because, okay, he's got certain information with him which helps him, okay, to think that this market is wanting to go lower, right? So you can do the same thing in a 1-minute bar setting and look for a market, okay, which has got initiative sellers in the 1-minute bar setting. But because, okay, we moved the container from 3 minutes to 1 minute, it will calculate only the activity within this 1 minute, and it will then find out whether there was more market orders in this 1 minute or not, right? And you can do this in a 30-minute version also. And the only difference is the calculation is done over a 30-minute window, a 30-minute time period, and we will get to know more about what the market is done in that 30-minute window. So this is a 30-minute candle of today, and you can say that in this 30-minute period between 2:15 and 2:45, there was a large number of aggressive market orders which came in and forced price lower from 21,064 right up to about 21,004 in a 30-minute window, right? Now think about these candles or bars and these time frames, okay, which we are using at as a container, okay, or you can say, okay, a bucket in which we are filling orders. And as long as the tap is running, that means the market is open, the bucket is gonna keep filling, right? Now the flow of water will decide, okay, the volume in that bar, in that container, in that bucket. The flow stops, okay, then the bucket, okay, does not fill, right? So the same thing over here. This is a developing initiative selling candle recognized by the flow of initiative sellers or initiative market orders. The flow of market orders stops to be on the sell side, then, okay, this cannot no longer, okay, will get classified as an IS order. So this will take shape only at the end of the bar, and after the bar is complete, this is final, okay, it does not change. But whilst it is developing, the initiative seller over here, okay, could print it as an IS, but lower down, okay, if there is a lot more responsive buying coming in, then, okay, this bar, okay, could be different from what it is right now, right? So think of it as a bucket filling with water. Till the bucket is full of water, you can say, okay, till it is not full of water, you can say, okay, that, okay, there is still developing and there is a chance, okay, for this bucket and its weight, etc., and the volume, etc., of water in it to keep changing. But once it is full, it is full, okay, there's nothing, okay, you can do to change it, whatever, okay, was already there. So this is, okay, how we look at order flow. Now what really happens is when you track the market this way, in terms of initiative buyers and initiative sellers, you get a bigger understanding about what the market wants to do over a period of time. So I'll just zoom out and I'll just show you, okay, what has happened in an order flow chart today. So this purple, which is there on screen, is what your initiative seller of today is, IS, market orders, supply side. And I'll be quick to tell you over here that this IS bar is the first IS bar we have seen in the Nifty futures in the past 1,000 points. So right, okay, from the time we started this series, this December series, this is the first initiative seller who has come in the Nifty futures. So what really happens is, and I'll talk to you, okay, about what actually to do with this IS bar in a minute over here, but it helps us, okay, to track, okay, where the momentum of the market is. So if I pan left and go up, so there were two more IB bars over here 2 days before. This was demand, and then this demand pushed the market further up, you can say, right? Then earlier there was another IB bar which came around over here, initiative buyer. So every time you see this, that the market has got demand and it's gonna push market higher. Now there is a quality level attached to all of these initiative buyers. So the volume which is there in the initiative buying candle or that bar is very, very important, and that is a driver of price also, right? So a bar of let's say 100 contracts and a bar of 5,000 contracts has got two different meanings in order flow. So we have to understand where that bar is. But what really happens is when these buyers show up, the other advantage we know is that these particular players who came in over here, they knew that there was something specifically important in the market at that point of time. So it's not just the appearance of this particular candle, the place at which they appeared becomes important for us. So we can safely say that because there was an initiative buyer coming up over here, the region below 2664 is now a support for the market. Now this is not random information. This is not information which is picked up out of any math calculation or anything else, or any quant for that matter. This is market generated information, because we know that there was demand outstripping supply over here. Demand became greater than supply, and this particular demand was driven by strong aggressive buyers. This particular low of this candle becomes a support for the market going forward. Now this is way back, and some of us will not be those kind of traders who like to hold positions for a long period of time. So that's not an issue. You can go to the most recent one. So the other one was about 2992 right here. So once the IB bar is come, this 2992 going forward will be a support for the market. Or you can put this one also as 21015, where the market is currently trading. So this is becoming a support zone. The other thing about initiative buyers and initiative sellers is, once an IB candle is established, so we are back over there where that previous demand was, and we came down to about 20,091. So the minute a new IS candle comes in right over here, the previous bar is cancelled and out of the market. Now the most current information is this one, and in the market we focus on the most current information as a driver of price. What has happened in the past is brought us up to today. What is happening today or right now is what determines the movement of the market from here on. So now this is on the 30-minute bars. These are for people who like to close positions. We have a formula over here when it comes to understanding time frames, and it's called the power of 10. It's called the power of 10. So if you are looking at something in a 30-minute time frame, that particular signal which came in the 30-minute time frame is valid for 30 into 10, that's 300 minutes. So that's about 300 minutes. This is going to be valid. So which is, this particular signal is valid for the next 300 minutes, which is roughly equivalent to one full session of trading, because this signal is coming in a 30-minute time frame window, right? The other way of this cancelling is price going back about 21,064. The minute price finds some demand about 21,064, we know that those sellers are no longer, who initiated at 21,064, are no longer in the market, and that's why the market becomes a new trend. So this, you can say, got cancelled. This seller is no longer in the market, or he decided to give up his position, and when price went back about 21,064, this signal is not valid. And the third reason it becomes invalid is there is another IB bar, initiative buyer, which comes in and cancels the effect of the IS bar. So three things. One, is the effect of any order in a 30-minute time frame or lesser is equivalent to the time frame we choose multiply by 10. That is about 300 minutes of a 30-minute bar, or 30 minutes of a 3-minute bar, or 10 minutes of a 1-minute bar, right? So times 10, that is be the power of that signal. Okay, that signal gets extinguished when price moves back above that level on which the seller initiated. And I'll show you some examples, okay, where you will see that over a repeated period of time, this signal, okay, becomes important, okay, for the market, because it's got some initiative selling activity and those sellers continue to drive prices lower. And the third way this signal gets extinguished is by the appearance of another opposite bar, which is called the IB bar, initiative buyers, which is a sign that there is now a counter in the market in the form of an opposite party who is adding more aggressive demand in the market, right? Now let's understand this in a smaller time frame and see, okay, how these signals actually work out. So I'm gonna, let's begin, okay, with the so let's go, okay, to the Fin Nifty today. And we had a classic case, okay, in the Fin Nifty today. The 21,250, okay, became worthless. But we were looking at this 21,250 all through yesterday. So I'll just go back, okay, to the opening of the bar. And why we knew, okay, that this was gonna be a resistance level for the day today. So this is the option 21,250. And we opened today at about 43 in the 21,250 today. This is, okay, the zone. But if you look back on your left, all through yesterday, the market, okay, was at the close yesterday, the market, okay, was getting a lot of supply over here. And at what price, okay, did the initiative sellers come? At 49.47, okay? And today, okay, in the morning, the high was around 43. But what we just said was that this level where the initiative selling comes in becomes a supply, okay, going forward. So I'll ignore, okay, this last 5-minute candle, but we'll go, okay, with anything, okay, before 320, and this, okay, becomes a supply, okay, for the next day. And this particular level came in as supply all through the day. And if you can go lower, this is 21,250 CE, which kept going down all day. So there was no need of another initiative seller. Yesterday's sellers were the ones, okay, who were holding this, and they kept holding this till somebody, okay, sold again at about 8.75, which is again a high risk trade, but he still managed, okay, to get something for it. And most of them, okay, held it right up until the close, and there was some closure here at about 3.35 later in the day. But yeah, this is, okay, how the Fin Nifty 21,250 CE worked out. And let's go back, okay, to the Nifty also. So in the Nifty also earlier today, we had, okay, some of these initiative selling activities, okay, which came in. So I showed you, okay, this part of the order flow. But if you look back early in the morning, so right at the open, the market, okay, opened here around 9:15 today, right? So 12:12, and we saw this initiative buyer step up. There was, okay, an attempt by the market, okay, and this was a failed auction point. And at this point, okay, we were actually, okay, wondering whether to go long in the market or whether this could be a trend day on the upside. So this was an IB candle which came in, okay. We saw, okay, some selling come in over here, so we really did not, okay, go in, okay, with this buy side candle yet. But here 21,110 was the level of support established by the IB. And we said, okay, we are going to be waiting till about 30 minutes, okay, for this candle to really show its weight. So what really happened? Subsequently, we got an IS right at about 21,114 today. Initiative selling just about half an hour later, 9:30, within that half an hour window. So this signal got cancelled, and now we knew there were no aggressive buyers left, okay, to add further demand in the market. So this particular level, 21,114 of the initiative seller, became the new level, okay, to watch on all upsides, because the initiative seller had established his position over here. And if you go back and check this chart for the next half an hour, the price, okay, did not go above 21,114 for that half an hour period, right? So from 10 to about 10:30, the market, okay, continued down till the validity of this signal. This was the initiative seller, and price, okay, went back quickly to about 21,115, but not really made an attempt to go over there, because the sellers were holding these prices at this level, right? Half an hour over, that trade is done. You got a new buyer over here. You can take this, but we'll avoid this because it's a cancellation of the previous signal, right? Stop loss was 21,094. Here there was another buying attempted, but no follow-up. Seller came in. This was a sideways, okay, kind of a market for a long period of time. And then finally, okay, the market, okay, dropped lower. And if you had kept that 30-minute candle open, you would have seen, okay, that there was a lot more selling activity, okay, which came in from about 21,070 kind of levels. So two things over here. Again, when you're looking at these in a smaller time frame, such as the 1 minute or the 3 minute, don't think of a 3-minute bar as being an absolute bar for the market. Give it, okay, about those 30 minutes and see, okay, how the trading goes on for those 30 minutes, and whether that initiative seller is getting more support, okay, from adjacent, from other people, okay, who are adding demand and supply. And you can do it, okay, from via your options tables also. Any number of, okay, options tables also you can pick up, and you can, okay, watch it, okay, from all of the options also. The same concept, okay, the initiative seller is the one, okay, who's going to be driving the price action. So Fin Nifty, okay, 21,200, okay, saw, okay, the price go down, go up, but immediately, okay, they sold it again at around 35 zone. And for the last half an hour, price, okay, despite, okay, Nifty going down, did not cross, okay, above 35, right? So these zones where these people came in and they added that initiative activity become pivotal for the duration of the power of 10, which is those 30 minutes or 300 minutes in the case of those things. So try to see this as a flow of the market. Now, what I've been speaking to you about is just one aspect of finding where the initiative buyers and the initiative sellers are. Now, I think, okay, some of you, okay, may have a lot of questions, okay, about how we approach this, and that's understood, because, okay, you're walking in from a price-based understanding of everything into something, okay, which is completely different. And we as traders, okay, fail, okay, to see the impact of it, because, okay, we trained and our brains are tuned, okay, to a certain level of thinking, and this, okay, does not, okay, register in that quickly. But if you just take a minute and you start watching all of this again and again and just let it sink in, you go one level down, this suddenly, okay, starts making infinite sense to you, because what the market orders are the drivers of price action, and just locating where these market orders are, okay, in a bar is the key to all that, okay, you need to do in order flow, right? Now, this IB and IS is what we said, okay, we are going to be speaking about, but this is not the only thing, okay, which drives price action or which drives an order flow chart. So what we have over here is we covered this right now, market dynamics with RB, IB, RS, and IS, but we have something called volume clusters. We have something called imbalances. We have got something called COT and OI. We got something called liquidity in the market. So about 5 other tools which help us to gauge the order flow. And not one of them, I repeat, not one of them is a complete picture of the story of the market. Okay, one tool cannot describe a market. It requires a collection of strategies. It requires a collection of inputs to get to know what the market is doing at every point in time, right? So before we close, I just want to quickly, okay, touch base on one other aspect of order flow. We spoke about aggressive market orders and aggressive sell orders, but beyond that, the numbers by themselves have a story to tell. The numbers by themselves have a story to tell. So one is okay, IB, IS, etc. The second story is within these numbers, right? And these numbers which show up are relative. Now, all these numbers, okay, which are on your screen are in terms of contracts. So they are not actually okay multiplied by 50 or multiplied by the share price. They are the number of contracts, because okay, we like to keep a uniformity between the contracts traded on the Nifty, the Bank Nifty, Fin Nifty, and you start observing in terms of contracts. Okay, all these numbers okay come together. But see, all these numbers okay which are come here, they are relative to the time and the volume of the day. But what remains consistent is these zeros over here, right? So these zeros over here, they will always remain consistent. And these zeros, whenever they come in a bar, have a story to tell. And that story is the absence of demand or supply. I'll repeat, that story is the absence of supply and demand. So the first part, I told you, okay, about what is market orders. Okay, now I want you to put your attention on where the zeros are, because okay, those levels tell you whether there is more demand in the market or whether there is no supply in the market. So in this case over here, right at about 42, okay, you see two zeros over here. It tells you okay that the market does not want to go up any further because the demand side is extinguished. And this seller, okay, who came in over here, 6,929 and 9819, these contracts are the ones okay who drove price lower. Okay, now we have qualified this and we say instead of 2, having 3 is more powerful. But every time okay you see 2 or 3 bars with zeros here before an IS, you will get to know okay that this market is run up and it's done. It's not going to run up anymore, because order flow is telling you that there is no other demand left to take this up further. So if you already had a long position, you cancel that position and that's over, right? So pay attention to zeros, especially okay if it comes in. It's a very simple concept. It helps you okay to understand okay what the market is doing. The same thing okay you will see on the supply side, right over here. Okay, you see these zeros, okay, they tell you okay that the supply is gone and the market is quickly probing up. So again, the same principle follows over here. Set of 3 zeros. On the opposite side, the signal is cancelled, right? So I hope okay you are getting me. Okay, and this okay comes in from a lot of observation. Now, because okay these zeros are come in the middle of the bar, this particular zone okay becomes a resistance okay for the market into the close. So this is how okay you pick up your stop loss points, and you pick up okay your areas okay where you know okay your trade is no longer gonna work for you. We use these zeros all the time at WeTrender to find positions okay where we can put our stop losses, because we know that this is a level the market has got no previous demand, or for that matter okay no previous supply. So we like to keep our stop loss okay around this 38, 39 or around this 42 zone, because we know that the market okay does not want to trade over here, right? So even that trigger okay of where okay you keep your stop loss is got a process to it. It's got a mechanism to it, and it's not just a random okay 35 rupees and 50 rupees and 32 rupees. You have to okay put some thought behind it and know okay where your stop loss orders etc needs to be kept, because you want to put your stop loss at a place where you know the previous time okay the market is not showed demand or supply over there, right? So I hope okay I am coming across and making sense to you. What we are trying to do over here is we are trying to incorporate a scientific approach to trading the markets based on what the market is telling us, not based on our view of the market. It's based on what the market is doing and the message it is giving us. And order flow is the clearest sign of what the market intends to do and what it wants to do, right? So for today's session, I covered ground on initiative buyers and initiative sellers, and I've covered ground on what is the impact of these zeros, which we call liquidity, absence of liquidity in the market, and they have an important role to play as well. We have to cover more ground on what is caught, the commitment of trade. We have to cover more ground on what is responsive buyers and what is responsive sellers. And we have to cover ground on what is the importance of this POC, the volume clusters in the movement of price. But that I leave it for the session on Friday. Do join me, and we'll conclude this part with some more examples about how this helps us in our trading. So I do hope that you found this particular session useful. For some of you who are not used to the concept of order flow, you may require more than one viewing to go through it, and you may have some questions which you can happily shoot to us at support@vtrender.com or charts@vtrender.com. Either one, we'll be happy to answer all these queries for you, or just communicate with us. Even on Twitter, you can talk to us, and we'll be happy to clarify these questions to you. Right. So I hope all of you found this session useful. I would like to take some questions if over here. Yeah, a few questions on the data. This is live ticking data. Order flow requires live ticking data. Without that, it is useless. So we spoke about this in our session on last week in phase 1 of order flow. We're talking about demand and supply, right? And this demand and supply is what? Is you inputting orders, okay? And you inputting those orders and getting fed to the exchange. The order flow is just a replica of what is happening at the exchange. Okay, it is an organized method of seeing how the traded quantities were executed, and this has to be live. It cannot be 1 minute delayed. It cannot be 10 minutes delayed. It cannot be even 10 seconds delayed. It has to be live, real time, because a lot can happen even in 10 seconds in the market, especially in the world of options. Right. So I think there are some more questions which I think Uttam and Suyog have been kind enough to answer all of these questions. So with that, guys, I'd like to call this session to close. I'd like you to all review what we've spoken about. There is a lot of information in this particular 45-minute discussion which we've had, and if it is not registered, it would take more than one viewing for some of you to get to it. But the concept is real, the concept is actionable, and if you really add this to your existing knowledge of the markets, you will create a higher edge for yourself, right? So I wish you the best. I leave you to it, and any more questions you can ask them to me on Twitter. Please note down these email IDs: charts@vtrender.com, that's charts@vtrender.com, or you can send them to support@vtrender.com, support@vtrender.com. Right? Thank you for joining up today, and I'll come back with the concluding part of this order flow series on Friday at 5 p.m. and we'll discuss the remaining aspects of order flow in that session. Thank you for joining in, guys.